As long as Bitcoin is priced in fiat, it is worth buying, even though it's about $90,000 per coin. Our United States national debt is about to reach $36 trillion. Our debt to GDP ratio has already surpassed 122%. This is totally unsustainable, and we will either have to default on it or print more money, which we're extremely likely to do, is just continuously increase the M2 or the money supply and debasing our dollars. Again, $1 is worth over 1,100 Satoshis. And then the value will keep going down as $1 will then buy you less than 1,000 Satoshis. And then about 100 Satoshis per dollar. And that number will just keep going down as there is no bottom to the fiat dollar. We can print unlimited money, so therefore Bitcoin can be worth unlimited amounts of money. In fact, ever since the Federal Reserve Act, we gave a central bank the ability to just print money out of thin air, as well as abandoning the gold standard in 1971. And the use of quantitative easing has led to an oversupply in our money growth. That is why our purchasing power continues to be eroded in the form of a stealth tax known as inflation. Meanwhile, Bitcoin has a fixed supply cap of 21 million coins. The issuance schedule is set in time. Ever since it was released in 2009, the reward per block was 50 Bitcoin. And then after 4 years, every halving, that number is cut in half. Currently, as of 2024, 3.125 Bitcoin are being rewarded per block. That's every 10 minutes. This will cut in half every 4 years until the year 2140, when the total sum of 21 million coins will ever be created by them. Your value is preserved and maintained in a world of fiat currency and money printing. That is why, as we just keep increasing the money supply, a hard asset with a fixed supply cap will continuously gain in value. Just like real estate or commodities, this is the latest asset class. If you're learning when to buy Bitcoin, there's a rainbow chart brought to you by BitBo. As you can see, we were just in a period of the low range and the blue range. As we are entering the green range, again, this is a logarithmic chart graph where the y-axis goes from $1 to $10 million. Right now, as we're about to enter the $100,000 price category range, we could go upwards of $500,000 this cycle and then back down to the low six-figure target price range. And then it will continue and we'll be in the millions of dollars by the 2030s. So this is a long-term investment you want a dollar cost average into. In terms of the stock to flow, stock means the total supply of the good, and then the flow means the inflow, or how often is it being introduced into the system. Well, every 4 years, we cut the inflow in half. So the stock becomes more valuable. As you can see, we are in this red territory range where right before a massive run up, because we are entering this 6 to 12 month range after the halving, which is usually when you see the largest price run ups. And then there will be a crash and we'll find higher lows as historically shown. And then again, reach over $1 million per coin by 2030. So this is a long-term thing you want to really just sit on and hold. The relative strength indicator index shows that we are at about a 75. So we're slightly overvalued, overbought for our current price at this range based off of the last 12 months of data. But previous bull runs have capped out at above 90. So we still have much more room to the upside. And then bear markets are ideally your time to buy, but that's not when people are interested, unfortunately. So again, dollar cost average. The fear and greed indicator index shows the bullish to bearish sentiment. Usually you want to be fearful when others are greedy, be greedy when others are fearful. The more greedy we are, the more likely people are going to dump their coins and the price will drop. The more fearful we are, the more likely we are to have a price run up. So just keep that in mind. And again, when we're in this greedy territory, You don't want to just ape a fat bag. You kind of want to average into it. Daily, regular interval purchases. You want to stack Bitcoin because it is the cryptocurrency of the future. It's maintained a number one market cap. The other alternative coins are more speculative. You may think you could get larger returns on your investments from them, but just stick with the number one because there is no second best than proof of work. The most secure computational network in the world, number one cryptocurrency, has broken the top 10 of most valuable assets by market cap, surpassing silver. That's right, silver. The hard, precious metal that humanity used to use as a form of currency, Bitcoin is now more valuable than every piece of silver that has ever traded hands before. Gold is number one on this list with a market cap of $17 trillion for historically being the best store of value. Now, Bitcoin is here to disrupt that. It is a superior store of value and it will one day be number one on this list. So we still have multitudes upwards just in pure market cap for being the world's most valuable asset and store of value ever. For the long run, you want to get your keys off of the exchange, not your keys, not your cheese. Please get a hardware wallet. As with Coinbase, you don't truly own your coins. With a hard wallet, you own 100% of your coins. So I will cover a video on this in a later topic. Let me know what you would like to see, and thanks for watching.